This is Alan Bush with ADMIS with the daily financial forecast for Thursday, October 22nd. In the stock index futures, we did see higher prices in the overnight trade. This due to better than expected corporate earnings releases. Also, we did see some follow-through strength. This after the president of the European Central Bank, Mario Draghi, indicated that they could expand their quantitative easing program, and this possibly could be announced at their December meeting. So more stimulus potentially from the European Central Bank and better earnings helping stock index futures to advance today. Also, don't forget that there's a very good chance that the Bank of Japan could be adding more stimulus to their economy later this year as well. So all of these factors combined taking stock index futures sharply higher. We continue to believe that with more stimulus globally on the way, that the main trend for stock indices is higher, and we also continue to believe that we will see new historical highs in all of the major indices next year. Now, moving over to the foreign currencies, Mario Draghi's statements about expanded QE in the Eurozone, supporting the dollar, taking the dollar index sharply higher, putting a lot of pressure on the euro currency. However, we feel that since the Fed will not be in a position to raise interest rates anytime soon, that the dollar index will probably give back a good portion of its gains later today. And by the same token, with the euro currency so much lower because of Mario Draghi's comments, that we will see at least some recovery in the euro currency today. Also, the pound, even though we did have better than expected retail sales numbers in the UK, the pound trading lower. And we also are seeing a little pressure in the yen on ideas that the Bank of Japan, as we mentioned, could possibly expand their economic stimulus later this year. Now, moving over to the interest rate futures markets, we are seeing some offsetting fundamentals. The economic reports that we had here today in the U.S. Basically were neutral, with the leading index coming in weaker than expected, but existing home sales coming in stronger than expected, so those somewhat offsetting. Mario Draghi's comments about more QE tended to be supportive to the long end of the curve. So even though we are seeing the bonds a little bit lower now, I think there's a very good chance we will see a move back to higher on the day and longer term. We do expect the longer end of the curve, the 10 and 30-year issues, to advance, especially with major central banks around the world, including the ECB, the Bank of Japan, several others, likely to expand their stimulus, all of which remain very bullish for the long end of the curve. So longer term, look for higher prices for the 30-year bonds. So once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland. And remember, good trading, everyone.